microphone check and screen share check, please. All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for February 16th, 2022. Let's start with the market health check. Another kind of quiet, mostly sideways, choppy day. There was a slight gap down, sold off a little, rose a little, finished slightly higher than yesterday's close. So we are still in the middle of this sideways chop. Without much traction. I will say that we have got a lower low in the belly of the dragon. A low and then a higher low in the belly of the RL10. The belly of the dragon is starting to shape up into a Kata 2 potential. I would take a price through the top of the dragon skin tomorrow as a Kata 2 entry. So I would be looking for like this price right here. Let's see what that is. That's about 450. I would take that as a sign of upward mobility. I mean, you got you have the PSAR is still providing support. You have the RL30 has rolled up. Tomorrow this time, the dragon will have rolled up. That will give you an owl entry as well. And you know, we've pretty much come back to the Bollinger Band mean here at about 452. So all of those feel good. It really has to get above 452, you know, for some real, to get some real traction. That would feel pretty good. You notice we've got the 10-day low down here at 435.33. And the RL90 is in range. The 10-day high is within range at 458. And then the all-time high is just lurking there at about 474-ish. So this is a market that's trying to heal. I take the turning point in the RL10 seriously. It's crossed the baby dragon, entered the dragon today, almost halfway through. So I would take breaking out of that as a positive sign, while remembering that we are in sideways volatile market. So that would be the price level. 450 on the S&P would be my trigger for long side trades intraday. I mean, I really want to see it get above the peak of the RL10 here, which is at about 456, or essentially the RL90. That's really where you pick up the swing. That's where I think you can pick up a swing sensibility there, and then above a new 10-day high, and then breaking above the edge of the river. That's where I really start picking up a long side bias. By that time, we would be in the we would be out of sideways and back into the start of a new bull. So that's about where I'm looking at to the upside. To the downside, I think I'm looking at the you know, I'm going to take the bottom of the RL10 as my guide. This is where I would I'm picking up short side trades here. Break through the river, and then a new 10-day low. That's about where I'm picking up extra positions on the short side. Yeah. So I should draw a line here for you. I go just to the bottom of the RL10. That's essentially the price that I'm looking at right there. So now if we back out of this and look in a slightly longer context, you can now see that, the tactical trade is this one. That's really that's where I start picking up the strong directional moves. And then if it breaks to the downside, this bottom of the RL10 here is decisive at like 429. That's really where it is all systems down and breaking through the 30-day low at 420. That's what the downside looks like. Very important support level, very important support level. And so if we did see weakness, getting these positions in on tactical times would be very useful. We'd have 3 positions short by the time it collapses below the RL10 and then the 30-day low. Okay. Let me know in chat if that was helpful. All right, let's look at the sectors for today. All right, so the S&P today was at 0.11. Slightly better was the Russell at 0.21. Let me back that off just a little bit. Yeah. So the S&P at 0.11, the Russell at 0.21. Treasuries were the best performer, I believe. Yeah, Treasuries and emerging markets. Treasuries at 0.59 and emerging markets at 0.73. The weaker indexes were the Qs at 0.03. Here's the S&P. The weaker indexes were the Qs at minus 0.03, and then diamonds were the weakest at 0.16. So in a sideways volatile market, when our weakest index is only down 0.16, that the absence of failure is actually a pretty positive sign, I would say. All right. So let's take a look at the sectors that were better. Slightly better were blended commodities 0.13, consumer staples 0.19, then a cluster in here from 0.29 to 0.51 consisting of consumer discretionary, agriculture, lumber, lithium, marijuana, Cliff natural resources, and then the other lumber. I put Cliff in there anyway. Then the next cluster going from 0.7 to 2.8, materials, energy, blended large cap crypto, Brazil and Mexico continuing to dominate. Simon Property Group is the commercial real estate proxy. Wheat and precious metals and Ethereum up 2.8. Then the individual targets that were good. Alcoa 5%, Devon Energy 4.7. Tesla, clean energy at 0.1. All right, let's look at the sectors that underperformed. You had clean energy and finance just slightly underperforming at 0.1 and 0.07. Moonshots minus 0.05. S&P Tech 0.1. Bitcoin futures minus 0.14. The FANGs minus 0.18. Bitcoin Trust 0.5. Oil exploration minus 0.55. The global future of finance disruptors minus 1. S&P bios, oil minus 1.15. Blockchain, the ARCs and the VIX all down between 1.5 and 4. Individual companies that underperformed. Squarespace, giving back some of that great big run it had the other day, minus 5%. PayPal 4.25. Robinhood 1.17, US Steel down 1%, Coinbase. So all of the financial disruptors there were lagging today. The four companies plus global future of finance. Microsoft off 0.3, Apple off 0.14, Rivian off 0.06. So kind of a mixed bag. But I really am intrigued here by the, Brazil and Mexico are just continuing. They refuse to lose. And then the energy materials complex feel attractive again. All right, here's my trade in Alcoa. So yesterday on the daily chart, I'm doing my work in Alcoa, which had been in a pinch. And this is on the dailies, right? The winter turned to spring, turned to summer, had a Z3 breakout here around 65. And it's had a pretty nice little run up to 75. Right. And then a 2-day sell-off, but which closed very near the top yesterday. So I put a risk box around that, and I was ready to trade tactically long out of that tight box or short out of that tight box with a hybrid frog. All right, so I'm going to use something like my standard 25-cent risk box on that one. But I'm also noticing that if we get an upward move, I'm targeting the key price level here at the recent peak of 75.25. So if it takes out 75.25, I'm going to see everything north of that as free and clear. So now what happens on the daily chart, as you can see, let me zoom in a little bit more. So here's that price on here's that price on the that all-time high there at 75.25. So we get a slight gap up from here to here, and very quickly it breaks through that key price level of 75.25. So now I have a long side bias as soon as price takes out this blue line at 75.25, and then I'm ready to use the opening and that's about a 25-cent risk inside there, and that's my minimum manageable risk box in Alcoa. So everything north of that feels like a good trade because it's breaking out of the floodplain at Z2 and the RL10 and the RL90 and the baby dragon. Everything is up and to the right and feels good. So this critical state was resolved to the upside. And I want you, when we look at the intraday chart, I want you to notice the region that is in the yellow, which was the indecision zone for me. And then I want you to notice that blue line indicating that's like the tripwire to really have a long side bias. Okay. So I can have a long bias if it breaks out of this yellow to the top. And then if it goes through that wire, I can pick up a secondary long side bias. And that's basically what happened. So the trade looks something like this. This risk box, this 25-cent risk box comes from these studies where the Z3 lines pinch. And so that becomes my manageable stop. Now what we get in the actual trade is that it opens up with a gap to here. So gap, a positive gap, and it opens here at that dash blue line. Let me bring that over. Yeah, like at 75. In the first 3 minutes, it sells off halfway towards yesterday's close, but does not get into the critical state, and then reverses and makes a really strong upward move that breaks through its own VWAP. In the next couple of minutes, it sells off and recovers. And then as it breaks through its own VWAP, and then starts taking off, I decide to put my entry in, because now all systems are go. This feels like I've seen a low, like a 1, 2, and now 3. It crossed my blue line from the daily. I've got my 25-cent risk box, which is anchored to the open. So if this thing's going to work, it should stay above the open. So I put my entry in at this location. As it's crossing the VWAP, I get my minimum manageable risk box in there. I'm using the UA exit. So now what I'm going to do is I'm going to leave that 25-cent box in place until price has now moved enough in my direction that it has moved 1, 2, 3 dots above my entry. Then on the 4th dot, I jump my stop to the 4th dot. In this case, it's right like at that VWAP. And I leave that in place until the Bollinger Band mean picks up the move. And then I use the Bollinger Band mean as my managerial exit. And then take my exit. And it ends up exiting at the Bollinger Band mean. And the capture is from 75.25 to 76. So that's 75 cents of gain here on 25 cents of risk. So that's about a 3R. It doesn't look like much. I gave back quite a bit, from the peak excursion down to the exit. That looks like the maximum give back. And that was about 50% efficiency. So this is not a particularly efficient trade, but this thing was so choppy and sideways. I just felt like let it go, let it run. If we get an upside move today, this should really take off. It never really materialized. Now, much later in the day, you'll see that there was a strong move out of this Z3 pinch late in the afternoon. I was not trading. I was talking with the British Army at that time. But there were some late afternoon moves that were available if you were around. There was enough volume on that too. I want you to notice how the VWAP, which had been flat most of the day while this thing is just grinding, in the afternoon, this buying pressure was sufficient enough to move the VWAP almost 75 cents, another full 1%. So that means there's a lot of volume that went into all this buying. So I am cautiously optimistic tomorrow for more follow through in Alcoa, particularly because they were willing to hold it at this price level up here, whereas the VWAP is 3 sigma away. So now what I'll be interested in seeing is if something like, if there's going to be a follow through tomorrow, I think you could use this price level around 77.25 as a safety zone. It should stay north of that. I did not hold any of that position overnight. When I got out because it was a tactical day for me, and we're sideways volatile. But that's going to be one of the important continuation trades for me tomorrow, is to take a look at that one. Okay. So that's what I want to say about that. That's the Alcoa trade for today. And the illustration of the Uwe exit. And then also the learning point about how the critical states that you can frame at the end of the day give you insights about how to start interpreting the price action for the next day, right? That's from like hybrid trading. All right. Let's go to the daily report. Dashboard number 1. All right, so we are now in sideways normal. I said incorrectly, sideways volatile. We started the day sideways volatile. Today was quiet enough that we have reverted to sideways normal. Now, what I will note is that there are three, that the three members of the bullish, volatile, normal, and quiet, those are all good for holding swing trades on the long side. The other one that's good for holding trades overnight is this one. If it gets to sideways quiet, that actually is often followed by a move into bullish quiet, which is very good for swings. So as we move away from volatile towards normal, towards quiet, that is a precursor of potentially good market conditions, right? And we're seeing over here in the risk Z how this is not failing further, but is now actually postured for possibly, another move to the upside. It could be one of these little gizmos where it doesn't stay bad too long and starts to move back up to Z2. So we'll be monitoring that one. The risk C still is in the red, so careful is in order, but there is some subtle signs of healing going on. Lots of dojis today. That's more typical now of that sideways normal condition. As the volatility comes out, you're seeing shrinking ranges, and that gives you dojis. Lots of auto framers now that the daily ranges are getting smaller, that now you're starting to see good multiples back towards the 10-day high. And that would lead me to look at things. I think, 3M, you have to look at 3M at 2.9 to 1 and Merck at 4.5 to 1. And in Techland, a 5DD and 3.7 to 1 in IBM. That's been getting punished, and that has an opportunity. In the ETFs, only a couple dojis and a couple auto framers. Treasuries setting up at 4.5 to 1. The underperformance in tech could take like two different ways. You could say, you'd like to see tech take a leadership position, but it was down. It was one of the percent losers today, but it was only down 0.2%. So that's almost like, if that's what bad looks like, that's actually pretty good. I'm really intrigued by the Mexico-Brazil continuation. You're seeing some really good performances on the 1 day, 10-day, 1 month, and 3 months. It's really leaving kind of the 6 month and 1 year underperformance becoming more of a distant memory. And you saw some strength today in materials and energy. And energy, of course, has been exceptional. So there's some intriguing things setting up on the, as volatility begins to drain, there is the possibility of looking for the new leaders in the sectors and the targets. And that's, we're on the hunt for that, to find the movers. In the auto framer, these are the ones that are better than 2 to 1 that are highlighted in the dark green. This column, the My Risk column, shows the mechanical model's preferred level of risk. In most cases, it's going to be range risk, which is yesterday's range plus a 5-cent buffer on either end, unless that range was so large that we end up using a full ATR risk. So a full ATR, for example, in 3M is $3.84. And that's the middle value between a quarter ATR 0.96, then the one ATR is 3.84, and then the range risk was almost $4. So most of the time, range risk is going to be that middle value between too little and too much. It's just right. It's kind of like the Goldilocks choice of initial risk. And so that gets reported in this column, my risk. That number is what is used to evaluate the reward to risk ratio that's in here. We say if we chose my risk and we set the target for the swing at the 10-day high, that will give you this reward to risk ratio. All right, so that's how that works. I got my eye on McDonald's in there. And Microsoft is just out of the band at 1.9, but that's close enough that it makes it interesting. I'm liking real estate too. This column over here, range max, is if you go back 200 days and you find the largest breakout, the largest single day range, that tells you what the what the upside could have been. So it goes beyond just like a range stat. It gives you some idea that if you had played the breakout and then you got that maximum range day, what kind of move would that be for sizing purposes? All right. Daily squeezes. We're starting to see more of these now that the market is getting less volatile. And now you have IWM and MDY near the top of the stack. The S&P is better than 2-to-1, so that's favorable for potential breakouts. And I like that finance is in there too. We're seeing a few more symbols coming into the spring and summer now that some of the selling has abated. And those are going to be your early leaders. Like you can see Mexico solidly in the summer. On a day that was like a recovery day today, that was it did not fail and the volatility diminished. I'm looking for those symbols that are in the green. Those are going to be the ones that have the most shorter term momentum. They're near the top of their 2-day cycle. So Cisco and Cliff, Microsoft looking good. And when it's at the top end of its 2-day breakout, but the longer term frames are shorter, that's actually the sign of recovery potentially happening. So I like that in Microsoft. That's also the case in Cliff and in Cisco. Notice how the shorter term momentum is much better than that midterm, and that just means there's a lot more room for it to continue to go. It's not ready to run into resistance on those time frames yet. Whereas you look at something like American Express, that thing is already fully valued near the top of its trading range on every time frame. So you wonder how much more room is there to the upside. Whereas when you look at something like Coca-Cola, all its best moves were in the longer time frames, and it almost feels like Coke is beginning to diminish. Whereas, and again, finally, Ethereum is on the way up. Weakness to above average to really strong on 2-day and 10-day. So that's cautiously optimistic there. Now, over in the ETFs, a way to find those relative strength leaders, you can see metals and mining, Mexico, greens across the board, even gold doing pretty well. There's Brazil and Latin America are just showing consistent strength. Whereas energy just beginning to diminish a little bit. I feel like the easier money has been made in energy already. Okay. Treasuries are coming into a really critical state here. They were up around, TLT was up around 155 and is down around 135. So that's almost a 12, 13% sell-off. At some point, you got to think that that's going to hold, and we're going to start to see some capital appreciation in there. So I'm tentatively a buyer, I'm stalking those for swing trades right now. All right, that's everything I want to look at in the daily report. We'll shift to the trades now. Just hat tip to Dennis. He's identified some specific rules. He's following Joe's lead on this one, where he's asking himself these questions, has them on a smart card next to his screen so he sees them as he's about ready to pull the trigger. Has the RL10 rolled up or rolled over? So what is price doing? Where is price with respect to the health of the trend, the RL30? Has price stopped rising and falling? Is it chopping? Are we in a critical state? Are the Bollinger Bands stretched or pinched? And what's the direction? Are they expanding or contracting? And just the focus on those analytical questions, the going through the ritual of asking those questions will help you process the energy of desire, of anticipation, of wanting to get into a trade at any cost. Just by exercising some restraint and reflection, you are becoming master of your own house, as Aristotle and the Greeks would say. Chris, I missed your question till just now. You asked me any particular time frame for that, or is it the one you plan to trade? For which trade was that? The Alcoa? For me, Alcoa, I'm going to be intraday only tomorrow.
No,
we are in sideways markets.
The one you were just talking about,
at
Dennis.
the intraday trades right
you hear
now.
me?
I want to see it get out of the sideways channel before I start thinking about swing trades. But those price levels I laid out in Alcoa were for the intraday trade tomorrow. If you're asking about a different one. Oh, on Dennis's trade. Oh, I think for Dennis, that was on the time frame that he was in. He was looking at 1 minute charts on that one, and we'll see that when we look at his chart. But I would say those are a pretty good set of questions for whatever time frame you're looking at, so you can characterize what is going on the dashboard that you're looking at. My theory is that if you're looking at that, you're trying to get a read on that particular time frame. So those questions should work on any time frame where you're looking to make a decision to frame a trade. If you wanted to see to infer what was going on in the higher time frames, you would just roll up the RLs. Instead of looking at the 10 and the 30, you could look at the 30 and the 90, or the 90 and the 270, because those will give you insights into what's going on with price action in the higher time frames without having to change the time frame on your chart. All right, so this is let's see what we got here. All right, so this is less in the Aussie dollar. I'm going to notice the Z3 pinch. We have a low, some higher lows. This one would have been attractive as a Kata 2. Probably this one would have gotten me into. This one short is looking at like an RLXD rollover. I don't mind that. You're looking for a return to the VWAP. And so if that is your potential gain, and if you're using this as your risk, you've got 1, 2, maybe 3. So I think that one works, and you manage the risk pretty nicely. This one, it rolled over, never really got through the PSAR. So you try the second shot at it. That's really the same trade. This was a little slower to exit. I might want to get out at that PSAR and stop and reverse there. I'd probably be taking that trade and probably would have exited here and then re-entered here, because now what we have is starting to be two failures to fail and then a higher low again. So rather than the extra short, I think I would probably be leaning to the long side on that one. But even though you take that one, I want you to notice that you're waiting longer to get out of it. The more times it fails to the downside, you're letting it move against you more rather than less. This is after 3 in a row, that should be a stop and reverse with a COTA 2 here. So all we're seeing is the downside. Check your bias on that. When you see that much going on to the upside and the only trade you're taking are to the downside, check your bias. Here's another nice range compression, break out of the river maybe. This one's better. I think you're calling that that should be a red circle. Make that red to show the short that you're aiming for the 270. And that's nice work. It holds with the doji right at the target you were aiming for 2R. That's nice. And now, and probably that one. On the 1 minute chart or a 5 minute charts, news has no effect. The currency markets are trading on all the news all the time on every time frame. So just play the patterns, turn off the news altogether. News has no value for clarity in your trading pattern. On 0 of my systems does it say what's going on the TV or what is the news. Does not matter. Remove one of those degrees of freedom. All right, so this is here's Dennis looking at the SPX with options. So he's asking that set of questions that we looked at. This one is a good scratch. It was in work. I hate when work intrudes on a routine trade. A reasonable effort, good exit. Super pinch happens here. By the time that thing finally breaks out, that's the big move. This is an extraordinarily good entry. Wow. You get a low and a higher low and setting right on Z-2. That's an extraordinary entry. This is a very good re-entry and got paid. Pretty nice. What I like about this is that when you are sitting right on the edge, that if this breaks this way, that's an easy stop and reverse. And this is like buying on the button. You have such a tiny little risk box and you're in the 0 state. No matter which way you get the big move, you can quickly get your stop past your entry to lock in gains. So that's really, really nice. Here's Luke quietly bringing home 11.5. He likes to start the day with the loss. That's me too. Get that out of the way. This breakdown out of the Z2, if this works, it should be big. It didn't. So as soon as it reverses, crosses the dragon, he takes the loss. tries the same trade again, takes the loss again, tries it a third time, says, all right already, even though I was in the money, I'll take the scratch. Fine, I'll stop and reverse. Gets his second entry in when it takes out the previous peak. And this is a Z3P. So he gets paid 2. He gave back quite a bit. And remember, if that's your risk, you gave back more than your risk on 2 positions. So that's -2. So this 2.0 that feels really good, at the maximum favorable excursion, you were up 4. Late on the stop and reverse, feeling good about his 2R win and knowing I was going to beat him up on this. The indicated short is probably here. A little bit late getting in, good scratch, better stop and reverse. And now he takes the emerging dragon and the Z3 pinch. Both of those are signals to the upside. So second position, it consolidates. He sees the last highest peak, gets his third position in. 1, 2, 3 exit here. Gold star for you. These are both worth taking. They almost cancel each other out, and was able to reverse on this side where you're that far. I mean, you're that close to the Z3. That's a 1, 2, 3 exit would be a little bit shorter. Still, that's pretty good work. And that's 11.5. That's a good week today. Just want to let that sink in. All right, so here's Mustafa. So he had some work to do today, so he's not got all day to trade. So he crafts a particular trading plan. So he's looking to find the movers, and he only had an hour. So what he was looking to do was capture the 1R and then quickly scalp in order to maximize the profits on a mover. He was after collecting specific R's today and not trying to maximize moves because of the time constraints. And so he brings in, with his aggressive short-term fishing, 4.7. Pretty nice work. Uses a hybrid frog box off the entry, does a quick capture, does a Kata 2 quick capture, Kata 2 re-entry capture with a scalp. 4.7 in the hour that he had available. And then notice that this is kind of symmetrical. The move to the upside is the move to the downside, and everything just comes back to where it was. Nothing to see here, just the normal trader volatility, the ebb and flow of the tides. That's really nice work on Bacht. That's that little crypto infrastructure guy that we've been carefully studying, thanks to Danny. Here's Park Hotels, which is one that I think Mustafa has been specializing in. So he was in the last half hour of his time available, and he still had some bullets. So he went with a friendly stock, one that he's very comfortable with. He saw the move up and consolidation, move up, consolidation, the beginning of a move up that took out the previous high. So he gets the quick entry, quick harvest for 0.7. Perfectly played to give him a total of 5.4 for the day. So very carefully calibrated, very measured shots, looking at a specific mover and one that he has comfort with. Well, that's how you do it. Nicely done. John in the Aussie, 0.38. tries the short side breakout, tries the short side breakout, tries the short side breakout. None of these got outside of Z3, and they're all in a Z3 pinch. So these all feel premature to me. Here's kind of the first. This is the closest thing you have to a fake one go to. If you do that, if you take this one as the breakdown and got short here, and then it reversed at the PSAR, you take that as the hit, and then you get long right here. That's fake one, go two. And then that's a long side signal, right? So then after you see that Z3 breakout to a peak, and then it rolls back to here, this is a good, that's a good trade because you're legitimate and thinking this thing can come down to here, but it doesn't. So he takes the fractional, gets a nice stop and reverse, gets paid. Quick reentry. It's now working in his favor. It gets across the VWAP. Gets a second position, a nice tight fix. And now on this one, this is where you've got these two moves already. Stalk this one to see where the support is, and then play the PSAR break to the upside. Don't be in such a hurry to be in every trade all the time, stop and reverse. When you have that kind of payoff, use that to find where it's going to give that, let it go back to there. So what? You're looking to see where it's going to find support so you can play the next leg up, which is this one. And just like this one, why are we getting short in here? Find out where it's going to give support and then try to play the long side. That's 1.5, 2. It gave back 2, and that's what you earned inside here. Because you're trying to play both sides all the time. Find the trend and stay with it. There was a discussion on that one in the foundation's Q&A last week that was pretty important. Tom's missed opportunity here. That one would pay for that turns this from a net down to a strong up day if you get that trade. I'm looking at this one potentially too. All right. That's everything we got for today. So let's get ready for tomorrow. I think tomorrow, interesting day.